Hello everyone. Thank you so much for joining me today. In this video, I'm going to be showing you what a pump and dump stock looks like, how to spot an options pump and dump, and red flags to be aware of with Furu subs. Before we get into all that, don't forget to like and subscribe and make sure your notifications are turned on so you can get notified of new videos as soon as they are released. The first thing I want to talk to you all about, though, is the allure of being an options trader. I understand this. I primarily trade options. However, I made sure that I had consistent, profitable trading strategies, a solid trading foundation before I took that leap into learning options. I also made sure that I opened up a secondary account just for my options trading that was separate from my regular equities trading and, of course, separate from an investment account. And I only put in there an amount that I was willing to lose, that I was comfortable with losing. I already considered it gone when I deposited it in there because options are complex instruments. They take time to learn. And I figured that I would probably blow my account very quickly when trying to learn options. And I have to say that options can and will eviscerate your account faster than anything else. I have personally lost 100% of an options premium within a matter of minutes to hours. And when you are trading options, if you don't understand what happens when they expire out of the money, when they expire worthless, then you will quickly find out that you can easily lose 100% of what you're putting into that option. However, I understand that you go around on social media and you see these huge profit and loss percentages on these screenshots, which do happen. I myself do trades with these options and can get very big runners. However, it is not realistic to think that this is how options work all of the time, especially these larger percentage ones, because they are usually a short expiration contract in a large directional move, which we do not get every single day. And with that shorter expiration, you're talking about higher risk, much higher risk with these option contracts. So that is why it's so important to already have a solid trading foundation when you go to learn options. A lot of these guys that you see posting these incredible screenshots won't tell you or show you about all the times that they are losing. Now, I'm not going to be teaching you about options today. I'm just going to be showing you a few things to look out for with them. But the first thing that I want to show you all is an example of what a pump and dump stock looks like, because the chart is actually pretty similar to what an options pump and dump chart looks like. All right, so here we have this stock, VGFC. And we're looking at the 5-minute chart, but the first thing I want to show you guys is the daily chart on this stock, because it's pretty damn bad. This stock has really been beaten down, and we're not seeing any technical reasoning of why it should start running. The second thing we're going to look for is news. Any news events, any catalysts that happened on this day, January 11th. Nope. No catalysts, no news headlines. So why is the stock running? Well, because it's being pumped and dumped. One day before, on January 10th, you see this little buy spike here, and there's actually another one the day before. So oftentimes these pumpers will load either early on the same day or a couple days in advance. And he probably did add, he added a little bit more before he pumped it out. So what happens is, or he or she, I can't say exactly who it was, and I don't think anyone is immune from doing this. So what this person did is they loaded up and then they started alerting their followers. Now, when you are dealing with someone who does this with a paid group, what they'll do is they will alert that paid group first, and then they will go on to alert on their regular social media accounts. So we see the first group of followers or subscribers who are buying in to the stock that the person has alerted. And then we can start seeing a little bit of selling going on into these bids. So we'll see these little spikes of sell volume, and that's where he's starting to portion out his position. Most of the time you will not see them dump their entire position all at once because that would be too obvious, right? So after he alerts the first group, we see additional alerts going out. So this is probably to his various social media channels. And then we start to see additional dumping into his followers buying right here. And then we see a large decrease here, which is likely him dumping out with the rest of his followers, and his paid group is starting to panic. Their stop losses are hitting. Look at that. His social media followers are stopping out, and then the stock is a dud. When you are first looking at this chart, you might be thinking, what are you talking about? You're telling me this person bought into a stock at 6-7 cents and started selling it around 9-10 cents, and he put all that effort in for that? Well, yeah, actually, because for a few reasons. The first being that these smaller few cent gains are not going to be as obvious to most people as being a pump and dump. It's not going to have any huge gains to where it's setting off scanners. And most people would think, oh, he's not going to waste his time pumping for just a few cents. However, with all of these followers, he's able to purchase so many shares that these few cents here and there compounds when you're able to repeat this over and over again to be able to come out of it with a pretty good chunk of change. So if you are concerned that your favorite Furu or whomever you are following could be alerting a pump and dump, you want to be looking for, is there any technical reasoning behind this stock running except for saying, oh, it's super bottomed out. It's been super beat down. You need a little something more than that. Is there any catalyst? Is there any news? Is there any reason for this stock to be running? Is there a catalyst coming within the next day? And then you want to start looking for signs of loading the day of, 1 to 2 days before. And once you start seeing those things combine where we have no technical reasoning, no catalyst, and we're seeing loading, it's clear that this person is going to alert it and then just sell into his buyers. Now, with an options pump and dump, the chart looks very similar. They do have less volume than stocks overall, but you're still going to see that loading, that alert spike, and then that sell-off. So with our options, the most important thing that you want to be looking at when you are trading options is seeing the liquidity. And now I'm going to navigate away from SPY first because I want to show you what to look for. Here is Upstart. I myself have successfully traded options on Upstart. However, they have always been directional day trades when the stock is having significant volume that day. So I'm really trading into the momentum, whether that be upward or downward momentum. When a person is pumping an option, they are usually doing it with a very illiquid option. Now, what does that mean for those of you who may not know? That is measuring the liquidity of that option. And what happens with illiquid options is that there ends up not being enough buyers at the end, and people who get trapped into this pump and dump have no one to sell to. So they end up holding that option, if it's an out of the money one, expiring worthless and losing 100%. The first things that you look for when trying to figure out if an options contract is liquid or not is you do want to take a look at the open interest and volume, and you want to see at least 1,000 for each. However, there is an important reason why that is not the only thing that we use, because the actual de facto way of measuring liquidity is through the bid and ask spread. For example, on Upstart, if we take a look at these 1750 contracts, we see a 6-cent bid ask spread, which is about 9%. This is telling us that this is a pretty illiquid contract, actually, because with options, we really want to see 5% or less. Now, can options with a higher bid-ask spread percentage be traded successfully? Absolutely. But especially when you are just beginning to learn to trade options, you want that being 5% or less, because that's lowering your risk of getting trapped. The bid-ask spread is also a way that the market makers are putting in their risk. So the larger the spread, the higher risk that market maker sees in potential price fluctuations. So overall, when you're just starting out, it's a good idea to avoid these types of contracts. Let's compare that to SPY. All right, now with SPY, you can see that the contracts here have about a 3-cent spread for the first two of them. And the second one here, the $400 calls, that 3-cent spread is actually just a little over 1% for the bid-ask spread, telling us that this is a highly liquid options contract. So you really want to be sticking with things like SPY, Apple, these other large names that consistently have high volume, high open interest, small spreads when you're trying to learn options trading. The last thing that I want to talk to you all about is red flags to be aware of with these Furu subs. Now, let me start off by saying that not all paid services are bad. Not all paid services are a scam. Actually, every successful professional trader that I know of would not teach someone for free. So just because it's a paid service does not make it a scam. However, there are some pretty clear differences When you are comparing a professional trading service, trading learning service versus some of these sketchier groups. One of the first things you want to be looking for is if this person is ever posting technical analysis along with their profit screenshots, along with saying their entries. Does this person have any listed bio? Do they list their experience, any certifications, where they got their own education? Now, of course, on the internet, a lot of people want to keep their privacy, which I understand. However, every single professional trading class and trading group has their team leaders with that bio. They are not afraid to say where they got that experience, how long they've been trading, what style trader they are. If you are expecting to be paying someone monthly to be teaching you, they should have no problem telling you how they themselves learned or showing you some type of proof of consistent profitability, whether that be brokerage statements, past experience, if they ever traded professionally for an institution or a prop firm, things like that. People who are completely hiding behind an online alias and not giving you any information about themselves or where they learned, how long they've been trading, then that is going to be your first red flag. The second is if they have vague details about what's included. Now, for this video, I researched a few different groups, and I'm not going to mention them by name. However, I compared 3 social media trading groups. One was $50 a month. They did not specifically market options. Another was $99 a month, and another one was $150 a month. And you know what all 3 of these had in common is that they gave vague details about what's included. You get, live trading and quote unquote education, but they're not telling you exactly what that education is and how much of it is included and what qualifies them to be teaching you to trade successfully. Because what ends up happening a lot of times especially with options, is someone will post these huge percentage gain screenshots. They'll start to gather a following, and then people see these and they think, wow, that guy must know what he's doing. Teach me what you know. Teach me what you know. I want it too. Because you know what? We all, at the end of the day, most all of us want the easy way out, the quick get rich scheme. It plays into that desire we have as humans, that greed. But what we don't understand is that just because that person hit an options lottery ticket, which happens, especially when the market was going crazy after COVID hit, these guys could throw out a bunch of bets into cheap, quickly expiring options contract. And if they hit one lucky winner with a big percentage gain, everyone thought that that guy had the secret knowledge that no one else has. And so they will start charging for a subscription service. And what ends up happening is you are actually paying that trader to reload his account. You are paying that trader to learn how to trade himself. That's what's happening. Because if someone cannot show you their trading experience, if you don't know where this person got trained themselves, They have no business teaching anyone else how to trade. If they can show experience, if they have evidence of the education that they've had, if they can show consistent profitability with verifiable proof, then that's someone you can start trusting with your money every month, especially at $50, $100, $150 a month. I better be seeing some type of proof. When I was comparing these groups, I also pulled up some professional trade learning services, some courses and some groups. And one of them actually offered an annual option where it ended up being, if you chose the annual option, like $120 a month. The other one was a $5,000 one-time fee, but that one was from an actual prop firm in New York City. So you pay that large upfront cost once, but it doesn't get more qualified than that, than actually being surrounded by professional traders. The other one that was about $120 they offered a large team, over 20 traders that are professional. This is what they do for a living, that are with you, that are teaching you. They had explained in detail the different courses that were included with your membership. There was so much more included with that too than just this education. And they still had the live trading. They had the one-on-one mentorships, the one-on-one trade reviews. And again, I'm not endorsing any of these services, which is why I'm not mentioning them by name, but it's pretty clear to see the difference in value with what you're paying for and what I would trust my money to. And again, with both of these professional level options, the traders that you're learning from have descriptive biographies. They cite how long they've been trading. They cite what type of trader they are. They cite the education they've gotten, the training they've gotten. And another thing that both professional services offered that none of the social media level groups that I saw offered was some type of money back guarantee or free service to show you what they're all about. And I'm talking about not just an alert Discord. They had pretty extensive educational courses, or one had a 7-day free trial. Others I've seen had a 1-month money back guarantee. They're not afraid to let you come in and see what they're all about. Not all social media groups fit into this category of being shams. Absolutely not, because I have seen very, very skilled and successful traders on social media running these types of groups. But again, something that really stands out with them is that they are not completely hiding who they are. They're not afraid to answer questions when you're asking them about, how do I know you are a profitable trader I can actually learn from? They are not afraid to answer these questions. Whereas ones that really make me raise an eyebrow, they don't want to be answering this question. They'll often block people who do. So make sure that you are asking for some type of verification before you are jumping into one of these paid services. Because I've seen, and I've been messaged by people who have been in some pretty well-known paid trading groups, and they paid quite a good chunk of change to be in there. And they said, I didn't learn anything. There was really no education. I mean, there was like some trade alerts, but I tried following them, even with managing risk. I even tried just paper trade following them, and they never worked. I don't know how this person is actually profitable. Well, when you have thousands of followers who are paying you each month, you don't actually have to be a profitable trader. You can just make yourself look like one. So Just be careful, you guys, where you're spending your hard-earned money. I hope this was helpful in learning how to identify what to watch out for. And I will see you guys next time on the next video. Bye.